Should you be using fundamental analysis in your work? If so, how? Hello everyone, it's James here from JEAFX. I am a currency and index trader with 6 years of experience in the markets. And in today's video, I'm going to be talking you through fundamental analysis and showing you how you can use it and what the different types of fundamental analysis are. So first of all, what is fundamental analysis? Well, most people are used to using charts. And when people are using charts, they are just trading on the price action of the candles that they see. Fundamental analysis takes this one step further and actually uses economics to take trades. There are two key types of fundamental analysis that I personally use and that I'm going to talk about in this video. And no, it's not complicated. It's quite easy to actually apply, but will give you extra clarity and confidence on your trades. So the first of the two types of fundamental analysis is the global macro picture, the geopoliticals and the larger broad macro picture of the economies around the world. This type of fundamental analysis is going to be used for directions. And we can actually use this to gauge where different currencies are going in the longer term picture. An example of a larger macro picture fundamental analysis would be basing things on the Russia-Ukraine tensions or the COVID-19 pandemic. I'll show you some chart examples in a bit, but very briefly, let's talk about the Russia-Ukraine tensions. Now, when Russia and Ukraine started this war and when this started kicking off, a lot of investor sentiment moved away from the Eurozone and Great Britain because most of their gases come from Russia. I think about 80% for the Eurozone, which therefore means that they are now in a deadlock where they're not really getting any of the power they want. Now, this has skyrocketed fuel prices, gas prices, oil prices, heating prices, electric prices around the Eurozone and around Great Britain. What this means is investors have seen a lot of uncertainty around these different assets and around the currencies related to these countries. This means that their money is going to flow out of the euro and out of the pound to more favorable assets. Now, the US dollar is the world's reserve currency, and it's seen as a safe haven asset. When times are hard, money flows into the dollar. When money flew out of the euro and out of the pound, this was all then pushed into the dollar because they have raising interest rates and they're not seeing such a big impact from the Russia-Ukraine tensions economically. So think of it this way. If you had billions and billions of dollars, would you rather keep your money in the currencies of countries that are currently under big economic stress, may not be able to get gas, oil, electric, all of these different things, power for their countries, and have huge inflation and flat interest rates at around 0%? Or would you rather have that money in an asset that is not so heavily affected by the war that's going on, isn't really seeing the downsides of this, is increasing because of the money flowing into it, and also has increased interest rates, which is going to give you more value on your money that is held in there? It's a no-brainer that you'd go for the safer asset that's going to pay you more than it would to hold it in a riskier asset that could eventually die. So that is why the money flows away from the risk-on assets and into safe haven assets like the US dollar, and that's actually caused the US dollar to rally loads, while we've seen the pound and the euro fall to new all-time lows or to parity levels with the dollar, where now 1 euro is worth around the same as $1, and at one point 1 euro was actually worth less than the dollar not too long ago. Now, if you only track the charts, you wouldn't understand why this is happening. But if you understand what's going on in the world as well that affects the currency valuations, it becomes very easy to understand why these things are happening. And if you understand why they're happening, you can then find great trading opportunities. In a time like this, where we're seeing the euro and the pound fall and the dollar rally, what can we do? Well, we can simply buy the dollar because we understand fundamentally why it's going up, and we can sell the pound and we can sell the euro because we know that at the moment there is no hope for these currencies. And we'll take a look at a chart example in a bit, but you'll see at the moment that simply buying the dollar and selling the pound and euro has been a profitable move for the past 1 year. So that is the first type of fundamental analysis that you can incorporate into your work. It's not difficult to do, but it will give you extra clarity on your work. That is going to be the macroeconomic picture. The second type of fundamental analysis that we can incorporate into our trading is going to be economic news. And there are two ways that we can use economic news to our advantage. Seemingly the most effective way that I would use economic news to make more money in my trading is simply to avoid large economic news releases like interest rates, unemployment reports, and CPI data. Now, how can we make more money by avoiding trading? Well, the simple answer is that by trading these economic news releases, you're opening yourself up to losing lots of money. If you can avoid losing the money, you're going to make more in the long run. So when it comes to these high impact news releases, I will simply avoid trading, and in the long run, that is going to help me make more money within my work. Now, the other way we can use these economics to our advantage and the economic data is to trade with things when the price action lines up. Now, I'm going to show you chart examples in a moment, but basically if the price action is lining up for a potential trade that looks really good and the fundamentals are coming out soon, you can actually use those fundamentals to speed up your winning trades. But obviously this is going to add a bit more risk, which I will also talk about when we cover this on the charts. So the two ways we can use economics to our advantage within our work is, first of all, to understand the broad macro picture. What's going on in terms of pandemics, wars, or different economies around the world? And how can we actually use the information that we've been given from the news to help us identify directions for currencies, which is going to then help us in our trades? And the second way is going to be using economic data, for the most part, to avoid taking bad trades and avoid losing money on these trades. But sometimes we can even get an opportunity where the news is going to help us on a position. So let's jump onto the charts now, and I'll show you my examples, first of all, of how to use the macroeconomic picture, and second of all, how to use economic data in the two ways mentioned to make more money long-term in your work. So what we can see here on the chart is the US dollar currency index, or the DXY by ticker symbol. This is an index or a chart that shows the strength of the US dollar overall versus a basket of different currencies, most heavily weighted against the euro, but it will show you a good idea as to how the dollar is performing overall. Now we're looking at the weekly chart, and we're going to look at this really from around 2018, and I'm going to talk through the pandemic and the war and how that has actually helped the US dollar to build all this strength throughout the past year. So here we can see from 2018, we started to build some form of relief for the US dollar. Okay, we had this big downside, bearish price market, and now we've actually started moving to the upside. We traded efficiently, and then look at this timing. Around March 2020, when the COVID pandemic hit the world hard, we saw insane volatility with big drops and big increases. Now remember, this is the weekly time frame, so this is a substantial move in either direction. This was due to the uncertainty around the dollar, and then following that, along with all other currencies, the dollar fell pretty rapidly and actually made quite a lot of downside movements back towards those 2018 lows throughout the course of the major impact of the pandemic. Now, coming to the start of 2021, we actually bottomed out and we started trading sideways. This was kind of the recovery anticipation for the US dollar. And then if we look from 2022, around this point here, we've seen nothing but bullish price action until obviously the past month has been a little bit bearish for the dollar. But this move was actually caused by a few different things. Now, the major one is going to be that the Ukraine-Russia tensions have kicked in around the world, and the Eurozone and the pound, Great Britain, as mentioned earlier, have been hit hard by this because there's a lot of investor uncertainty around holding money in those riskier assets when they could have them in safe havens like the US dollar. Now, another reason that this has done so well versus the other currency pairs is because the Fed increased interest rates. And that basically means that if you're holding your money in the dollar, you're going to get more for your money, essentially, as opposed to holding it in falling asset classes where you're not getting any interest and you're also losing value because of the uncertainty that investors hold around those currency pairs. So it seems like a no-brainer to move your money into the dollar. And obviously, the more money that comes in, the more demand, the less supply, we are going to see a nice, strong increase in the dollar. So if you didn't understand any macroeconomics and you didn't have any idea why this was happening, it would be hard to kind of work out why the dollar is doing so well and why other currencies are falling so hard. But when you have this clear picture in your mind, it's actually very simple. You know now, okay, the dollar is going to be performing well. Other assets are going to be performing poorly. So what can we do? Well, we can buy the dollar and we can sell other assets. Now, if we look at this then, the dollar index has been incredibly bullish through 2021. Let's take a look at Euro USD. Through 2021, 2022, we've seen nothing but decrease, and GBP USD as well will show us a very similar thing. Through 2022, all we have seen is bearish price action for this currency. What can we do here then? Using our understanding of the broader macroeconomic picture, we can buy the dollar, we can sell the pound and sell the euro, and this would have worked out brilliantly. Now, one thing I've missed out on myself this year, which I should have used the fundamentals to my understanding because I already knew what was happening in terms of the dollar building strength and other assets being very weak. Now, the yen, incredibly weak at the moment. And one thing I've missed out on myself is not buying USD JPY through this year. Let's go back to the start of 2022, which is going to be just here. If you'd have brought USD JPY, there is no time this year until around the last month that this would have not have been a profitable buy. Okay. All year, all you had to do was just buy USD JPY and keep buying USD JPY, and you can see you would have stacked up profits. And this is totally due to that building strength in the dollar and the weakness of the Japanese yen, all driven by macroeconomics and fundamentals. So by understanding what's going on in the bigger picture, by using these economics, you can actually find these trades that you might not find elsewhere because you may have been looking, for example, if you were just a price action trader, just to sell supply zones. You know, we've had a breaker structure here, this kind of thing. You might have just been drawn in by the chart patterns as opposed to understanding why this is going on. And if you understand why this is going on, you have easy free money here. Now, this is one thing I missed out on this year. I have a bad stigma with USD JPY, so I don't trade it, but I should have put that behind me this year because really, buying USD JPY was just clear, free, easy money. But then again, selling GBP USD and selling Euro USD was free money as well for the same reasons given. And this is how we would use those macroeconomics to build directional biases and make more money in our trades. Now, the second way that we are going to use fundamentals, as mentioned, is going to be through economic news. We have some good examples here. We'll go to Euro USD for the first example. And this example is going to be one of those ones where I mentioned sometimes if price factors in setups, you can use the news to your advantage to win trades faster. So looking at Euro USD here, we can see we have a clear uptrending market from this point. We've had this high, higher low, higher high, higher low, and now we've pushed up and we broke structure here and made a higher high. Only very slightly, but the higher high came in, showing that the bullish trend is intact. Now then, let's look at this price action. We had a pull down, which has liquidated these two nearly equal lows, filled an imbalance and traded into a demand zone. So already this looks like a good buying position to take, right? Now factor this with this news release, which was a CPI news release, and you'll see that we could have won around 5R in about 1 minute. This was a single 1 minute candle that actually rallied all the way to the previous highs. So by seeing a nice price action setup anyway, you could have used the CPI data to win this trade a lot faster. Now, this is where the risk management comes in, because sometimes through news, with how fast the movements are, if you're on the wrong side of this move, your trade stop loss will not be triggered where you want it to be. So let's say you brought in here and the trade did go against you. Maybe your stop wouldn't have got filled here. Maybe it would have got stopped somewhere down here. So if you are going to be trading into economic news releases like this, you need to be managing risk to around half or even less of what you normally risk on a trade. If you risk 1% here and price gaps your stop loss, you may end up losing 2 or 3% really, because obviously there is no one to fill your other side of the trade. However, if of course you are risking around 0.5% here, even if the market gaps your stop by about this much, you're only going to lose your standard 1% on this position. So that is how you would manage risk around these trades. But I would only recommend trying to use news to help you to win trades faster if you are an experienced trader who is good with risk management, understands the market, and has some skin in the game. If you are a novice trader, I would totally avoid this, and instead I would focus on avoiding news releases for this reason. So the same CPI data is just here on the US 30 market. Now, I posted some ideas for the US 30 to go higher, trade into a supply zone, and then get a big sell-off in the future. We're not there yet, but when I posted this idea, everyone was like, nah, the CPI is going to sell off the US 30, and the US 30 is going to make new lows through the CPI news. Now, this is the problem with economic news, right? It's quite a gamble, because even if it seems clear what the market is going to do, the data can really give us any outcome. And as we can see, loads of people expecting a sell-off, well, that did not happen at all. We rallied just like we did on Euro USD, and we actually came through and made new highs in the current trend. So by gambling your way into the news here and trying to, get your best estimate, it's just not good enough with economic news, because it's not always going to work out how you expect it to. The sentiment for economic news always looks to the month ahead. So even if the data looks good or bad now, that doesn't exactly mean that the market is going to move how you want it to. This is why sometimes we'll see an interest rate release which is positive for the dollar, for example, but the dollar falls off a cliff, or the other way around. You need to be very cautious with economic news, and if you are not an experienced trader, and just in general, even if you are, one of the best things you can do when it comes to big news like interest rates, CPI data, and unemployment reports is just totally avoid trading it. Now, where are you going to get the information on all of this high impact news? That is going to be Forex Factory. This is a website that is going to allow you to filter through the news. I would filter just the red high impact news. I would avoid the other news as well, because that's not going to sway your trades too much. And then I would factor this in every single week and make sure you're avoiding trades through the high impact news for the relevant currencies. So use Forex Factory to your advantage. That is going to help you to avoid more losses and win more money in the long run. And those are the two ways that I use fundamentals to make more money in my trades. Number one is the macroeconomic picture, which is going to give me more confidence and more clarity as to what the market is doing and why. And the second way is economic news, which generally I'll just totally avoid, because it's going to help me win more money in the long run if I'm losing less money in the short run. And also sometimes we can use it to our advantage to win trades fast, but only sometimes, and we should never push to do that with every news release. Only if there's a pinpoint perfect setup lining up at the time of the news release, and we are willing to risk less than we usually would on that position. So hopefully this video has opened your eyes to the easy use of fundamental analysis and showed you how you can use macroeconomics and economic news to win more trades and lose less money on the trades that do go bad. If you've enjoyed this video, please do subscribe to the channel. You're going to get more education every single week, as well as trade ideas on a Monday, every single Monday. And make sure you join my free trading course. There's a link in the description of this video, which will take you there. There's 13 videos covering 10 different topics, and that's going to show you why you're not winning and how you can turn your negative results into positive results within your trade. Please drop a like to reciprocate the value that I've given you in this video, and thank you for watching. I will see you in the next one.